Hey traders, checking in on the stock market today. We had a pullback, a rejection from resistance. In the video yesterday, we went over what our key resistance levels were, and we didn't break them. So we got tightening daily ranges, which means ping-ponging back and forth price action, which means the bulls have yet to prove to us that they are back in the driver's seat, in complete control, setting their weekly higher lows. I'll point out the levels that are the most important support and what we need to see for the bulls to prove it. We'll also watch the sunset on my face. So looking at SPY, first thing, it was a day for top fishers, and top fishing is when you have a clear resistance level nearby and you short and you put your stop above that resistance level, and we can see anybody that did that on SPY this morning had a solid day. High of yesterday resistance 390.92, high of today 390.07, daily inside bar. So if the daily inside bar breaks bearish tomorrow, we will have our low of the pullback, high of the bounce from last week, lower low, high of the bounce from this week, and then it's up to the bulls to form a higher low compared to 387, make that 378.23. What are some clues that we're going to drop to a lower low or hold support? Volume. If we are going to drop and break 378.23, it will have to be on increasing bear volume. In the absence of increasing bear volume, we can assume that we are going to form a higher low compared to that level. We're watching the 4-hour time frame as a little bit of an inverse head and shoulders. So here is our left shoulder, here is our head, here is our neckline failing to break the left neckline, and it's now up to the bulls to hold the low and break those resistances to change the trend. And if we pull that off, we will convincingly be setting our weekly higher low, and we'll be looking right back at the all-time highs. If we break our low down at 378.23, then it's still red flags, absolutely. And again, it would be on increasing bear volume if that were going to happen. So today was a fairly easy day as far as keeping things clear. We were watching all of our major sectors, first thing, and SPY. Can they break? We're going to see 3 scenarios. Number 1, we're going to break resistance on all 3 like we did yesterday and see bullish continuation. Scenario number 2, everybody rejects and we have a daily inside bar day. Scenario number 3, some break, some reject, and it's a little bit toppy. SPY, XLV, and XLF all rejected from their high of yesterday first thing. QQQ broke it, but that did not last long at all. QQQ broke the high of yesterday, which was 323.94. We broke it by 39 cents, but again, look how long that bull break lasted. This is the 1-minute time frame. And the answer is, it lasted all of 1 minute. And then we convincingly dropped over the next 2-3 minutes, and we said, okay, that's not a convincing bull break whatsoever. So rejections from resistance is how the day shaped up. I'll go into some of my trades here at the end because I am now stubbing my toe after being in the zone for months and months. It's just a 2-day toe stub, but I'll go over some trades that I failed on, and we'll take it from there. So IWM, rejecting from the high of yesterday first thing and closing at the low. All in all, it was a very healthy consolidation day today in the market as a whole. There were no red flags. The last hour changed that a bit because if you look at SPY in the last hour, we had our high of the day, low of the day, failed to break the high of the day, and then for the last hour, the bears just poured it on here. And that kept it from being extremely healthy daily consolidation compared to what we saw yesterday with the bulls in complete control. And that last hour definitely saw bear momentum. QQQ hit a new low of the day in that last hour. So weakness was notable. QQQ rejected from the high of last week's bounce. We rejected from that level by 12 cents. If the low of today breaks tomorrow, it is all about 310.88, a must-hold support level. And again, the hope for the bulls is the same inverse head and shoulders to hold the low of last week and break those resistances to try and change the trend. IWM key support, bulls need to hold 214.81. So after yesterday's bull move, we were watching key resistance from the market video yesterday. Now after today's bear move, we're watching our key daily supports. And it's just been red, green, a lot of back and forth. Again, choppy action, and in my opinion, that is definitely why I am stubbing my toe a little bit. XLF, rejected from the high of yesterday. First thing, failed to break it by 5 pennies, but no major red flags. Pretty tame day overall. If the low of today breaks tomorrow, we look for a daily higher low compared to 32.19, which is our line in the sand, daily higher low support. Healthcare sector, high of yesterday, rejected by 2 pennies. If the low of today breaks tomorrow, we're looking back down at the low of the dump, 112.32. Look at the daily EMA 12 resistance. 4 out of the last 5 days just rejecting from that level. As long as we keep setting daily lower highs, the bears are keeping their short-term control. Biotech sector weak. Daily lower high very quickly set, 152.28. So again, keep it simple. Drop last week, bounce for a lower high. Lower low, lower high. Maybe we drop to a lower low. Key support, 143.51, back in play. Semiconductors, daily lower high is set. All about support at 234.92. The difference here is it's an equilibrium. Some names drop to the lower low on the 4 hour, but this is a very nice 4 hour tightening range with 234.10 from extended hours as a low to be watching, but a potential play off that support as we continue to tighten up. The bulls hope we continue to tighten up. Certainly don't want to see support levels break tomorrow. Solar sector pulling back today, gap filled from yesterday, and anything above 91.51 is a daily higher low. Bulls need to confirm the daily trend change back in their favor by holding the low and then breaking 107.25 where we topped out. And again, what you're noticing on all these candles is the close at the low of the day. And if we're looking at the S&P 500 futures chart overnight, the 4 hour is where it's at. High, 4 hour higher low off EMA support, lower high, and we're close to confirming a 4 hour downtrend. Bitcoin already confirmed a 4 hour downtrend. We've been trading very similarly. Perhaps a clue. MSOS, big difference. We closed strong. Have not seen MSOS close near the high of the day while the broader market closes at the low of the day anytime recently. And I did add some MSOS today. Reason being, the Canadian MJ sector showed up big time right out of the gate. APHA was up 12% very quickly. And then it was just a complete fade all day from there. But oftentimes we see the Canadian MJ move real fast and hard because it's on higher exchanges. There's shorts to squeeze. There's dollar volume in play. And we often see the US MJ act as laggards and just slowly try and play catch up. And so even though the Canadian MJ sector gave back all their gains from the morning's strength, the US MJ bulls did see that laggard action and a strong close. But it's the same thing on the daily. We got our low of the pullback, high of the bounce at 51.08, higher low. Anything under 51.08 is just a lower high. So still in a tightening range, scouting a weekly higher low, but it has not been set just yet. Let's look at our EV names because they're seeing some weakness. NIO had a bearish reaction to earnings, bear break. We're looking down at 41.66 support, lower highs and lower lows. BLNK, still holding, daily tightening range. Tesla is still holding in a daily tightening range. That upper wick did not happen. It's a low, high, higher low, lower high. Key support tomorrow is 659.51. If it breaks, we continue the daily downtrend. The lower highs are very clear on this chart. The burden of proof is on the bulls, and they have been unable to prove it on this bounce attempt. Everybody else of the major names has already broken bearish. LI dropping to a lower low, XPEV dropping to the lower low. So the EV space is still seeing weakness. The VIX, trying to set a daily higher low. So again, tightening ranges. We got tightening ranges on SPY. We're looking for a tightening range on the volatility index as well. So we got our high of the bull move. We're now scouting a higher low to try and form. If the high of today breaks tomorrow, anything under 31.20, just a lower high. But watching this potential tightening range. Dollar. Certainly looks like a top temporarily on this daily candle. If the low of today breaks tomorrow, we then scout a daily higher low compared to 89.68. As of right now, we're rejecting from weekly resistance. What the bulls would have to do is set that daily higher low and then follow through to break 91.60 and confirm the weekly trend change. But again, the dollar is not really impacting the broader markets in the short term. It's impacting commodities a lot more clearly, in my opinion. Gold bullish reversal candle, directly inverse to the dollar's bearish reversal candle. Still in a 4-hour downtrend as far as I'm concerned. Low, lower high, lower low. Anything under 1760, just another lower high. Bulls need to change the 4-hour trend. Then we just zoom out and scout a daily lower high, anything under 1816. Silver is holding on better, I think. Bigger bounce. Yeah, so 2708 resistance in play. Again, another inverse head and shoulders potential. If we reject from 2708, we need the higher low and the confirmed trend change. Then we would zoom out and scout the daily lower high, anything under 2821 here as well. But again, silver is in a weekly uptrend. Gold is at its lows. Miners bounced today and broke the high of yesterday. Little bit of some clues perhaps. Miners have led the way to the downside. Let's see if they give some clues for some bounce follow through. We haven't changed the hourly trend. So we know we will need a clear hourly higher low and higher high tomorrow at some point to confirm follow through. And just like the metals, we then zoom out and anything under 50.39 is just a daily lower high. Bulls need a clear daily trend change to change momentum. Oil still weak. We're looking at 59.40 daily support. We're still in a 4-hour downtrend. Bulls would have to change the 4-hour trend back in their favor, holding 58.60 support. And again, even if we do, we will then scout a potential head and shoulders. It's looking like oil might need some weekly consolidation. Higher low every week for the last month. Natural gas, daily bounce underway with the 4-hour trend change. And bulls want as much follow through as possible. It would still be a bear flag at this point. How do I know? Use your fib retracement tool. High, low of the pullback. As long as we're under the 382 retracement level, a bear flag is more favorable. If we make it to the 50% retracement, then an equilibrium becomes more favorable. But as of right now, it's a potential bear flag still. Have to keep this 4-hour uptrend going. Anything above 2837 is a 4-hour higher low. So resistance rejections, all about support in the short term. Must hold those levels. Watch the volume. We will not break the lows of last week. Or was it Monday? Whenever we hit those lows, we will not break them without increasing bear volume. So volume can be a clue. So trades I took today, I'm just stumbling. It's gone from complete flow state. Don't even think about trades. Just win, 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 and then just a little bit more frustrating. And just recognizing the shift. Again, it's inevitable. You can't stay in the flow state forever. And the key is recognizing it. Because if you don't recognize it and you trade as often with the same position sizes when you're in your flow state as to when you have lost that flow state, you're going to give back money just as quickly as you accrued it on the way up. So the first trade I took today, no biggie. It was a solid attempt and don't really have any regrets about it. It was an NIO bounce play. Watching for a bounce on the bearish earnings reaction. And was watching the 2-minute time frame. There's a 1-minute double bottom that got my interest. So just watching the initial pullback, and right here, we hit the low. I'm watching a lower high every 1-minute candle. We hit the low. We held it. Long lower wick showing bulls buying the dip. Made an entry in the 45, 30s or 40s. And then I flipped half because I know a 2-minute lower high is the most likely scenario. So I sold half. My break even at that point was 45.10. I put a stop under 45. And I stopped out for, I think, a 5% day loser, which is nothing. Pretty much break even. We then bounced. And I could have looked at that and said, oh, darn, I should have got back in. But then we dumped into the end of the day. And I was happy to stop out. Because obviously, the bulls did not see any follow through. So a 5% day loser to start the day. No biggie. Pretty much a break even trade. And pretty much like it never even happened. So that wasn't a big deal. The best trade I had today was APHA. Just watching this consolidation, and as soon as we got to the 5-minute EMA, I started scaling in a bit because anything above 1995 would be a 5-minute high or low. So just scaled in, lower high every 5-minute candle. We broke that pattern. A little bit of an uptick in bull volume, but I knew because of the size of this pullback, we were just looking for a 5-minute lower high. So I scaled out quickly into that 5-minute lower high. So I maybe had an average in the 2020s, and I probably sold some in the 2040s, 2050, 2060, and just a little solid win to get me on the right track. Another trade I took that failed was ZM. ZM, bullish earnings reaction after hours yesterday, and then just an absolute bear fest. Look at that candle. So I made a bounce attempt when things were just extreme. Wasn't playing off support, but it was right. I was using the 2-minute time frame. Things extremely extended, and it was on this bounce attempt. So I had a position. Maybe my average was 393 or so, 394, with a couple scale-ins here. We then bounced, rejected, lower low was 0 follow through, and right here is where I gave up on the trade. And it's because we had a clear resistance. We broke it by 10 cents straight into a pullback. That's a double top rejection, and that's showing me the bears keep complete control. If you zoom out on this name, a lot of people tried for bounces here, but there were no signs of the bulls at any point. There were no fake outs. It's just a 5-minute downtrend the entirety of the day. And if you were watching the bid and the ask, it was very clear that this was large unloading of position, in my opinion. Because if you're watching the bid and the ask, every time the ask would be bought, let's just say it was bought at $3.95, and then they buy $3.95.15. The ask gets hit at $3.95.15, and instantly the ask drops to $3.95.10, and then $3.95.05. And it's just these bots that just drop it down. No matter how much buying at the ask there is, they just drop it down to lower and lower. Observe the bid and the ask. A lot of traders watch the tape. A lot of traders watch level 2. I just watch my quote box, and I watch the bid and the ask, and I get a lot of observations from that. And I can see in the opposite direction as well. When the bulls are their strongest, Tesla used to do this all the time on its bull run. Selling into the bid. Every time you sell into the bid would tick higher. And that leaves no opportunity for the bears to gain any ground. It keeps constant pressure on shorts, and it's the exact opposite here with ZM. It kept constant pressure on longs, it kept shorts extremely comfortable, and no matter what the bulls did to buy at the ask, they could not get anywhere. Watch the bots on the bid and the ask. When you see the ask get bought at $395.15, you want the next ask to be $395.40 and to sit there. You don't want to see constant undercutting. Just think of it as a queue, a line of people waiting, and everybody's rushing to the front of the line to sell lower and lower and lower, as opposed to people waiting patiently and saying, well, the price is going up, people are buying at the ask, I'll just wait till they fill my order. And again, it's the bots that are doing it. There's not people that are constantly just lowering the tick instantaneously every second. It's automated. That's today's lesson. So let's look at my account. So I've had a great start to the year, and this consistency, this is only the last 2 months, but it's been the last 5 months of just this. And it's gotten to the point of what is going on. But you can see I'm rounding out a little bit, and this doesn't have today in there, and I had a couple day loser today, so it's going to be rounding out a little bit more. And I'm just back to where I was a week ago, but I'm recognizing the difference. It's different. It's a different feel. And I have to pump the brakes, get more picky, use smaller position sizes, because the last thing I want to do here is get in a losing streak. And think this goes back to my poker days. People are on a hot streak, they're chip leader, and as soon as they lose the chip lead, they then start to go on tilt and they blow it. There's nothing to blow. Just chill out. You're still second in chips. So I'm still doing very well on the year, but I know that if I go on tilt and try and make it back to a new account all-time high as fast as possible, or increase position sizing in response to me losing, that's going to be all kinds of red flags. So again, recognize the shift. Keep tabs on yourself and do not allow a losing streak. If I see another red day tomorrow, I'll probably stop trading for a few days because I haven't seen 3 red days in a row in a very long time. And again, the analogy that I give is like a basketball coach. If the other team scores 8 points in a row and they end it with a fast break, you call a timeout and you break that momentum. If I'm playing ping pong and the other guy gets 4 points in a row, I'm going to lollygag to pick up the ball and toss it softly to him. All right. See you tomorrow. Do good things. I'm still waiting another month or so before I clean everything up, all the dead stuff, and fix all these beds. I'll fix a bed as I need it. I'm about to plant peas this weekend, but there's a bunch of bugs and varmints living in it, and if you clear all your dead stuff out before it's done freezing, all those things die. So giving them a bit more time. This pipe under the driveway has been filling up with sediment, so I have to dig out downstream and then hope that everything that's upstream gets pushed out into the hole that I make here. Otherwise, I'm going to have to get in on my hands and knees and get all the rocks out of there. Because when it rains, this water picks up real quick. There's still high nitrogen levels here in the pond, so all the decaying leaves at the bottom have the greenish tint of algae growth on them, and that's making the water appear greenish. So definitely gonna have to keep an eye on that all this year, but not wanting to put lime and other chemicals in and try and mess with it. Mom and Dad Goose were here, as you can see. We'll see if they stick around. Other than that, the first few frogs over the past couple days have started croaking, and we're slowly transitioning to spring. All the garlic looking good through the winter. And I'm going to clear this bed out today and plant peas there and have the peas trellis up on the fence here where the beans were last year. Got to get a big load of mulch and mulch this whole thing over again. Otherwise it's just going to be constantly battling all these little sprouts because I let everything go to seed last year. So there's a lot of seeds waiting to be born in this mulch. Turkey tail.